Hi, my name is John Barrett with PM Consultants, and I'm joined here today with Garrett Loesch, who's the Chief Financial Officer for the Borough of Tuckerton. Welcome, Garrett.
Welcome here.
Hey, thank you so much for having us. Today's topic is actually the annual financial statement. Now, I know a lot of you out there are like, what's that? I don't know what an annual financial statement is, also known as an AFS. But in a municipality, the Chief Financial Officer at the end of the fiscal year has to, in essence, reconcile the books and prepare something called an annual financial statement. An annual financial statement is probably about 80 or so pages, depending if you have some utilities. It's a thick document. And what it contains is balance sheets from every different fund, a recap as to revenues, appropriations, tax collection rates, in addition to capital balances, because when we issue a capital ordinance for a town, it authorizes spending. So we, once again, want to show where our figures are as of the end of our fiscal year. And the annual financial statement is an unaudited document. So it's something that either the Chief Financial Officer does, as you do, or sometimes the town will hire out to a consulting firm like us, or even an auditing firm to come in if we're not available, to basically compile these numbers. And ultimately, Garrett, when you get an annual financial statement, after it's been prepared by you, it gets filed with the state, correct?
That is correct.
Right. And this is also a document that's needed in order to prepare the succeeding year's budget.
It goes hand in hand with the budget, and even when the state reviews our budget, they look at the AFS document and the budget document, and they make sure that if the financial statement says that I need to put $500,000 for debt payment in, they want to make sure when I go to the budget, I didn't put $800,000
or less. Well, God forbid, 200,000, right?
Yeah. They want everything to jive back and forth correctly.
Right, and the annual financial statement actually does show the collection of taxes for the municipality. And a municipality will collect different levies. That's the amount to be raised by taxation. Now, we always say that no resident's really happy coming to Borough Hall to pay their taxes. Usually they don't have a big smile on their face. But one of the things that they don't understand is that we are a collection agency for other taxing entities. So in your borough, you're not only collecting for your municipal salaries, wages, debt service, the operations of the borough, but you're also collecting for county taxes, county health, library, open space taxes possibly. You might have a local fire district, not in your case, but a local fire district that would approve a levy. In addition, the big one usually, which is usually a big one, is the schools. So whether it's a local school or regional.
Or regional.
Yeah, so that's basically, so out of $1, we might be keeping 25 cents of that dollar for municipal operations, but basically wiring or transferring that money through those other taxing entities. So that's one thing we like to point out today, that we're not the ogres keeping all that.
And that all shows in the annual financial statement. There are schedules or pages that show all that information.
Now, when we calculate the amount to be raised by taxation for all these levies, ultimately we don't collect 100% of those. So we have what's called a collection rate. In a town of average size, depending on what type of tax sale they have, whether it's a standard sale or an accelerated sale, the collection rate should be over 99%. And that collection rate that's defined in the annual financial statement is also incorporated into the succeeding year's municipal budget in order to compute the reserve fund collected taxes, correct?
That is correct.
Yeah, so the higher level you have, the best collection rate you have is beneficial to all the taxpayers, because in the scenario where you've collected 99% of the taxes through this budget appropriation called reserve fund collected taxes, you might be budgeting, so you collect 101% so that we can actually get to the 100%. So when you have a town that has very strong collection rate, low delinquencies, that's actually a really good thing for the average taxpayer.
That is a sign of things are going well.
For sure, for sure. So when we file the annual financial statement with the state, as you said, they also take a real hard look at that with regard to where we're looking as far as the next year's budget, and especially debt service. Debt service is something that they always get down on to make sure that we're working with the bond counsel, your financial advisor to the municipality, to make sure that there is enough appropriate in debt service, because you need to pay debt service. We go into default, and we don't want to have that for a municipality.
Yeah, we do not want that.
Yeah, because that actually affects our rating. There's 3 different rating agencies: S&P, Moody's, Standard & Poor's, and Fitch. that actually will look at what our collection rate is, look at our fund balance targets, and generally, if we don't have the audit perform, which as of the end of the year we wouldn't have, they rely upon this document to see what our financial...
And a municipal rating is the same as an individual's credit rating.
Oh, I'm sorry. Yes, absolutely. These are, you hear AAA, AA, all that good stuff. And ultimately, the rating agencies are taking a holistic view on the finances of the municipality, their outstanding debt, and they're offering a rating for the investor. Because when we go and sell municipal bonds, we're not selling it to, back in the day, we used to sell it to the mom and pops in the town and give them a coupon, but now we're going to a clearinghouse, they're issuing the debt to other investors. Maybe you might have an investment account that you have municipal bonds, equity.
The underwriters are always looking for those ratings and have questions. Yes.
Right, because if we have a higher rating, we have a less chance for a default for that municipal debt service. So that obviously, the higher rating means that when we go out into the market, that investors
we pay a lower interest rate.
Right, because the risk is not there. It's a risk-reward factor. So if we had a horrible credit rating, you as an investor would want a higher rate of return because you have a default risk. And I'm happy to say in the state of New Jersey that we haven't seen any type of defaults. I mean, Atlantic City has been a town that's always had a problem due to structural imbalances. In fact, the state had to come up and back their debt at one point because they were fearful of a default. And a default in one municipality at a 565 actually has a trickle-forward effect because now it's the entire New Jersey municipal market, correct?
And I think New Jersey takes a bash on many different things, but its fiscal responsibility has proven very good. They do not allow towns to go bankrupt.
Correct, because the state is always important, because obviously as a municipality, we are what's called creatures of the state. We were created by state legislation. I guess they could absolve us and make it all just one government. That's not going to happen. In the state of New Jersey, we have state government, we have county government, and the local municipalities. So those are the three forms of government. Now, obviously the state would deal with state prisons and other large areas of welfare and other subsidies there. The county government deals with local county jails, the sheriff, any type of county fiscal operations that are associated with it, the county prosecutor, those type of departments. And then the local municipality basically is where the rubber meets the road, right? We're dealing with the residents day in, day out. And it always seems when residents come in to talk about big things, they always come to the local level because that's where they start. And sometimes we have to educate them as to maybe you got to talk to your state senators and assembly because it's state legislation that we're only adhering to.
And that AFS, that annual financial statement is what wraps all of that up into one document.
Right.
And it's all in there.
Right. So later on, after the AFS is produced and filed, we then have usually use that information for the budget. And then when the auditors come in and conduct the audit, that's really what we look at. And ultimately, I know you've had great success in this. When you complete the AFS and you close out the books, and ultimately everybody wants to know what your fund balance is, what your surplus is for the town. And when you have an audit conducted and your financial figures stand up to that audit, it's one of the greatest feelings you have as a CFO, that you caught everything and that the information that you crafted and prepared was relied upon and actually held up to audit. So annual financial statement, it is due in the first 3 months of the year after the fiscal year close. It's a requirement. Sometimes it takes a little longer in case you have a town that has some fiscal issues that need to get reconciled. But generally, it's one of those documents that's very hardly understood, never really asked for.
It's used by the financial people in the financial world.
Right.
More than I think the average resident.
Right. But this is also a document that you have to put on your website, the municipal website. So we have to have 3 years of documents, annual debt statements, which we'll talk about in another interview, also the annual financial statement, the annual budgets, and the audits. So that's for full disclosure and transparency. And once again, next time you're at your local municipal website, look on it, annual financial statement, thumb through it. If you have any questions, always feel free to contact the town's CFO. They're certainly happy to help you understand the document and answer any questions you have. That being said, thank you, Garen, for being with us today.
Thank you for having me.